Per usual, everything on this channel is for educational purposes only, is not intended as financial advice. So it's been a while. BTC hasn't really done much since the last video, to be honest. Let's take a look at the usual suspects here. Look into Bitcoin.com. Not an ad, but the guy put together some great charts and some great data, and that's what we're all about here on this channel. So the Pi Cycle Top Indicator, everybody's going to be talking about it in a few days because it's going to cross. You're going to see a billion tweets. This is the end. The sky is falling. I'm going to lay out the case why that isn't the case. So what this is a back-tested 1-year Mma Multiplier with a 111 Mma on top of it, and you get some crosses that line up with the tops in price, the previous 3 all-time highs basically. Currently it looks like we will cross within the next couple days, so you're going to see a lot of this, and backtesting says with this indicator alone, be careful. Let's go through some other stuff. Let's take a look at the 2-year Mma Multiplier. Green is the buy zone, red is the sell zone. Not quite in the sell zone just yet. And this one goes all the way back to 2011, prehistoric, ancient history times. This is the 2-year Mma in the green. This is 5 times the 2-year Mma in the red. And it basically just says, how overbought are we? How overbought can we get? Based on backtesting, it says that once we cross this red line, we have 3 to 4 weeks of insanity, right? So it's not sell everything at, not investment advice, but it's not sell everything at 74. It's hold on to your butts at 74 because we're going to have some likely insanity. We've never crossed it historically and done nothing. You can argue that maybe this counts as doing nothing, but even still, we revisited that and exploded upwards. So it's certainly I'm not going to say hope. I'm not going to use the word hopium because people in the comments on Twitter, they get me, they say this is hopium. No, this is data. But the assumption is that we're going to break this 74 level or whatever it is when we break it, and then we're going to have some insanity. Now, price is irrelevant. It's about timing here, which is something that is probably difficult for people to understand. There isn't like a target per se. We can talk about 100K, 150K, 125,000K. Like, it doesn't matter. What I'm really looking at is stuff like this that says, what can the market tolerate? What is likely based on backtesting? Some assumptions there. Another way to read this is once we break down below the red MA, then that's your sell signal. That's your sell everything signal. The sell everything signal isn't when we break above, it's when we break below that. Based on this indicator, you want to get out of everything. 2-week moving average heat, 200-week moving average heat map. This shows you how fast the 200-week is moving up. And we color coded here. Currently in the puke green bile color. We're not in the red zone yet. It's not moving up super quick. This is probably going to slow down, honestly, now that we've done a bunch of nothing over the past few weeks. But just another data point, right? We're not at the top yet, and historically we get 3 to 4 data points here, 3 to 4 weeks. I don't know exactly how this calculates, but 3 to 4 points of you've been warned, right? You've been warned. You should have been out by now. That's what that's telling you. Stock to flow is currently I don't even know what to say. You either love it or hate it as far as this indicator is concerned. I'm not a big fan of it. It's a bit of a meme, but it's worked. It's another data point, right? And we're just hugging that trajectory extremely well. Eerily well, right? Current upside, like median, is around 82, 88. It moves up a little bit over the next few months, but it basically, to me, kind of says like Q2 is going to be the top or close to the top. And you can look at how that's looked relative to previous times. It's overshot by a bunch and then came back. So the median for me until like 2024 is there's a high probability we're going to hit some sort of top sooner rather than later, which lines up with everything else, honestly. Puel multiple, this is basically notional coin issuance in USD. And it's kind of, again, what can the market handle as far as miners getting paid? Miners are making like 50 million a day, which is insane considering it's a 1.8% inflation. So USD wise, miners are printing. That's why BTC hash rates going screaming at all-time highs, ETH hash rate screaming at all-time highs. In ETH's case, it's less related to block reward, more related to block reward plus fees. That's all going to shift around in a few months, but also very bullish. Also a problem if miners are selling because that's just crazy selling pressure. I'll get to a mining metric that we can look at in a second, but based on backtesting this, again, it says we're close, right? We're in the upper third of this indicator, but we're not overbought quite just yet. MVRV is a measure of the total market cap value relative to how much is moving on chain. So it kind of says, are we so overbought on price that the utility isn't baked in anymore? It's basically how I would read this. And MVRV for BTC right now is 5. Again, it's in the upper third, but it's not like, whoa, crazy, be careful, watch out, boulder, stuff like that. There's no big issues here just yet. It's getting up there, certainly, but it looks more like 2017, where it just like oscillated at highs and then exploded, right? It's, again, if I'm crafting this narrative, this hypothesis of what I want these metrics to look like, and what I expect them to look like, so the assumptions is that we're gonna explode on all this stuff, and it's gonna be super obvious, right? Like, that's the hope. That's the easiest way to trade this. That's the easiest way to look at these signals. If we look at the UTXO age, just focusing on 6 months or less. So how this works is every coin, because it's a public ledger, you can look every single coin, when's last moved, when the change is last moved, and we can measure that. We can say, okay, what did the UTXOs look like during these past 3 highs, right? Basically 50% of the chain moved within the past 6 months of each high. So my interpretation of that is this represents people selling. This represents miners selling. This represents the hive mind of the public, whoever, saying, too rich for my blood, I'm out, I'm selling, I'm going to change my life, I'm going to better my life in some way with fiat, and it is what it is, right? Again, just another metric, another data point to look at, but it's pretty obvious, right? Like, maybe one thing if all these metrics didn't always point to like extremes, right? Each time on each all-time high. But again, extreme, not quite there yet. So right now, the 6 month or less UTXOs are around 37%. And basically the market tolerance is 50% as far as newly moved coins within the past 6 months. So if we bring all that together, let's put it on a spreadsheet. Let's look at the backtesting, look at the dates, right? Pi cycle. Again, you're going to see a lot of this, so be prepared. Point them to this video when they say Pi cycle is crossed. Oh my God, it's over. Right? Okay. Let's look at all the data that we can. Pi cycle, 2-year Mma Multiplier, 200-week moving average heat map, Puel, MVRV, hodl wave, and all this is telling me, even if we cross tomorrow, it says that the rest of this stuff is not even close to being ready to be over. Right? It says get ready for everything to be over. Certainly, it's the beginning of the end, like I keep saying. But it's a timing thing, Like, you have to look at this stuff in aggregate. You can't rely on one thing alone. So it just says get ready. So I'll keep looking at this every week. Hopefully I will do videos once a week on this, but that's that data in a nutshell. As far as technicals specifically are concerned, everybody, I assume, right? I assume I'm always right in the TA department, and everybody's looking at this ascending triangle. You post it on Twitter, it becomes a meme. 33K is a thing, right? It's in the lexicon. It's in the lizard brain of people. So this is an ascending triangle as far as I'm concerned. And you have a series of higher lows with a horizontal resistance. As soon as we break that horizontal resistance at 60K in this case, we should see both an explosion in volume and an explosion in price. And keep in mind that while these patterns form, you do see a declining volume profile. So this, to me, is fine. I'm not concerned that volume is basically 0 on BTC right now. The party's happening on alts, that's fine. Let them have their scam pumps. I'm okay with it. The ETH chart I'll get to in a second, that's more concerning because it broke out of the horizontal level, but volume hasn't really picked up yet. We're getting to the point where we can start to talk about a B-band squeeze. So how Bollinger Band, they're not even on this chart, but you're just supposed to know. Bollinger Bands, how they work is their standard deviations from price based on the past 20 days. According to John Bollinger himself, 20 is the best value. You can move that up or down for crypto, 14, 30, stuff like that, I think is reasonable. But on backtesting, 20 looks pretty good for the Bollinger Band squeezes. How this works is if price is above the median line, this will be green. If it's below the median line, it'll be red. So it's projecting the strength or weakness in the potential move. So what you're looking for here is first tight Bollinger Bands, which I don't have on here, but just imagine them. and then you're looking to see whether or not we're above or below that median line. So really what I'm seeing here is we're not tight enough yet on the Bollinger Bands to start to think about the squeezing mechanics. Like really, historically we've had very few squeezes of this caliber, but when we do, they've always led to something, right? Down, up, down, up, down, up. So they've been pretty good as far as the hit rate is concerned. And over the next few days, if we don't see a move, if we still consolidate in this triangle, then this will definitely tighten up, and we probably will see a sub 0.1 Bollinger Band width. And if we zoom way out to like 2010, we don't have a lot of these historically. It might look like we have a lot of these, but we really don't. We have basically one every couple months, and it's been a while since we've seen a massive Bollinger Band squeeze. So it's reasonable to assume that we might get one. If you compare this to 2017, though, we didn't have any squeezes. It was truly up only at that point in time. Looking at the pitchfork, the 50 to 200 VPVR, obviously when we're sitting at all-time highs like this, we don't really have that much volume support on the way down. So it's always a concern that, we just fly off the table or something to the downside. But we have plenty of other things to look at. If we look at the diags of this pitchfork, those will all act as supports. The really big support's the 200-day moving average, which at this point's around 35 to 40K. We've got yearly pivots, R2, R1 at 45K, at 35K. The R3 yearly pivots at 60, the R4 is at 75, 80. And these, for the most part, act as a ladder. So if we break above or below a single pivot, we're going to go to the next pivot. So again, this lines up with this ascending triangle. As far as 60K to 75K, that move is concerned. We can look at the distance of the 50 and the 200 as far as how spread apart it is when we've last touched the 200. Both of those things suggest we are more overbought than oversold, which is fine. I don't think it's, it's maybe not this width as far as where we were during the last all-time high, but that's another metric you can measure. I'm not too concerned with that at the moment. Volume dropping, like I was saying, which is fine. You just want it to pick back up if we do break highs. And RSI is doing something, and maybe it's a falling wedge. I don't know. It looks suspicious. It's plotting something. I don't know what's going on here, but some sort of triangle thing. Overall, I'm not too concerned with where we sit. Plenty of reasonable supports on the way down. One of the last thing about the pitchfork is we are definitely in the upper diag, so it's more evidence that we are in the beginning of the end here as far as the trend. If we go to 100K plus, we're going to be way outside the pitchfork at that point, which isn't the worst thing, but it says we are overbought. Bucko, we are overbought. Daily cloud looks okay. I don't really see any major issues with trend. Again, when we're consolidating, the trend metrics will look fine for the most part. We aren't slipping below the cloud. We don't have a bearish TK cross. We haven't had a bearish TK cross since October. We've mean reverted a few times on the Kijun. Everything looks fine as far as the cloud is concerned. The big thing I'm watching for is if we do break down, if this is an ascending triangle failure, or turns out to be an ascending triangle failure, then I'd be watching for an edge-to-edge move, a short trade from like 50 to 40, or whatever this is at the time. That is definitely a trade worth taking. Not investment advice, but it's a trade I'll be taking if and when that presents itself. A branch on the decision tree, if you will. Currently just, it's a wee branch. It's tiny, but it's growing by the day if this ascending triangle does not break up. Something else people are watching is this potential like head and shoulders type thing. I don't know if I believe that as much as the ascending triangle possibility. Alligator Fractal, again, another trend metric. It's MAs and entries and exits on these fractals. Today it's actually printing a stop out fractal, or a stop out candle based on this fractal. So it definitely says, be careful. Be careful here. I'm looking at it. I'm a little anxious, a little nervous seeing that happen, because backtesting on this has been pretty good as far as the hit rate is concerned on the daily. If we zoom way out, take your favorite trend metric, zoom way out. This is the 3-day, and it told you to go long in October, and this is a trailing stop, and we're not below any trailing stop so far. So all's well on that 3-day Alligator Fractal. The stop outs looks like it's somewhere around 50K, so we're fine. And it tells you to add on any break above a green fractal, and that's currently 62 or something. This is ultra conservative, but it's worth zooming out a little bit at times. I want to look at the exchange reserves. This is BTC Exchange Reserves. It's pretty simple, really. Supply demand. Exchange reserves are at a multi-year low, 2.2 million, and bit of a bullish divergence there. Price doing a bunch of nothing while exchange reserves dwindle down further and further and further. So if I'm bearish at all, I just pop on this exchange reserve hopium and I say to myself, man, price is going to go up. Look at all this demand. Look at all these coins moving off exchanges. Walmart's getting in here potentially. We got the Coinbase IPO, all this other stuff coming on. I don't know, it's hard to be bearish. Here's the miner position index that I was alluding to earlier. And if it's below 0, that means miners are holding and not selling. If it's above 5, 10, 15, then miners are selling in a big way. And they're not selling here. So that's interesting. You know, they're adding hash rate and they're not selling. So they're either borrowing to buy and scale up, or they have a bunch of money already from previous sales. But since March 6th, not many miners have really sold on aggregate. So getting pretty interesting here. This looks bullish. Is it a leading indicator? You know, exchange reserves, they look bullish. Is that a leading indicator? Let's flip gears to ETH real quick. Starting with the exchange reserves again, to me it's just a giant bullish divergence here because exchange reserves are dwindling further and further still. If we look at DeFi, ETH locked in DeFi, or value locked in DeFi on the Ethereum blockchain, continues to increase. Locked is a bit of a loose term because it's not like a CD or something where it's held for a certain amount of time. But nevertheless, it is off the exchange. It has a job that's not selling. It has a job that's doing something like yield farming or whatever, right? And it's another way to look at new participants, billionaires coming in, you know, whoever, right? Everybody's looking at DeFi, NFT garbage, that sort of thing. Lots of people are looking at that stuff. Looking at ETH technicals, again, we have a similar ascending triangle setup, I think. It's weird that, again, volume has done nothing since we broke all-time highs. ETH is very scared of price discovery. It's very allergic to making new highs consecutively. Historically, though, ETH does like to retest like support, you know, like it is here. If this breaks down, that's definitely concerning. It's still within the diag. You know, this is the ultimate support here, this diag. If it breaks down further to the diag, you know, you're certainly concerned that this is just going to flop over like a dead fish, but ideally you want to see it hold at this support around 19 for sure. You know, you don't want that to break once it breaks up like this, but volume's got to come in or else we're going nowhere, right? If this acts like an ascending triangle and continues to move up, we're looking at 23, 26 just based on the pattern. ETH Daily Cloud looks fine. Again, it told you to go long in October, November, and we've had several mean reversions, Kijun, taps. We had a threat of a bearish TK cross, which I was certain that was going to happen. Didn't happen. I was looking at the edge-to-edge trade potentially at that time. We did not get a candle close into the cloud. It flirted with one, teased us, didn't happen. So now going forward, this is the edge-to-edge that I'd be watching if this all breaks down. You know, if we break down below this diag, this is the short trade I want to take sometime in May. I didn't talk about seasonality, but Q2 is the most bullish quarter for crypto across the board, so we'll see, right? We'll see what happens, but everything so far looks fine. Trend looks fine. The 50 and the 200 look fine for ETH. They're probably less spread apart than BTC. Plenty of support at this point at 1200. You got the yearly pivot. You got the 200-day moving average. Volume just looks so gross when you zoom out like this. Just kind of down to nothing. So volume's definitely going to pick up. Currently sitting at that R4 yearly pivot. And it's always interesting when you pop on these pivots and you look at levels and how it works out. That we're just chilling here, right? We're making a decision, trying to figure out what we're doing, and the next pivot up is at 2500. So that makes sense. Along with that ascending triangle, it is worth noting that we are out of the pitchfork at this point. We have been for a while. And the last time I saw this on a bullish pitchfork was on BTC in 2017. Few differences here. Obviously, BTC was in this pitchfork for 2 years, and it looked clean. Maybe the most textbook pitchfork I've ever seen on crypto. But it broke above and found support basically on the top diag. Again, that would be 1200 in this case. So I don't think everything's over. If we do break down, and if we look at that edge to edge again, you know, that shows a target of like 1350, you know, bouncing around here. But all this stuff lines up as far as short trade expectations, bounce expectations. If we do break down, Another way you can look at this is, BTC 10x from here. And it's interesting that BTC was in the same price. The pitchfork looks the same. It's very, very similar to how ETH looks here. I'm not saying ETH is going to 10x, but nobody was talking about a BTC 10x here. Nobody. 0 people. Not hopium. Just saying, things aren't impossible here for craziness, right? Absolute insanity. It's a different time, different narrative, more coins, blah, 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 blah. I get it, but keep that in mind. Use some backtesting lessons here. I'm looking at the Alligator Fractal for ETH. Still looks fine. On the daily, it's bullish. Alligator, the MAs are cross bullish, and it tells you to go long above the most recent local high, which isn't like rocket science, but it's something to consider. It's currently at 2100 or whatever it is. Your stop loss for this is all the way down at 1350 or whatever that is. Not really a great long setup. As far as the trailing stop's concerned on the daily, you could zoom way out and see again on the 3-day. Told you go long way back here. Trailing stop loss is currently at 1600. So that's a more advantageous trailing stop loss. Then lastly, just looking at ETH BTC, I'll say it a million times till the cows come home. I don't think this is a tradable pair. It's either just punching it or absolutely dying, getting murdered. So it's really hard to trade because it's all over the place. I popped on the 20-week SMA, which has been okay at sort of telling you what's going on. Currently, it's in between figuring out what the hell it's doing here. The thing that makes the most sense, the two things are this pitchfork. Currently in the bottom half, buy zone, sell zone. This is the mean reversion point. So it's resisted a couple times here. And then the second thing is the weekly cloud. I'd be watching for bullishness later this year based on this. It hasn't been above the cloud since 2017, 2018, but that's when I'd be watching for bullishness. It also suggests we won't hit 0.1 this year because the R5 yearly pivot is at like 0.85 or something. A lot of people are looking at 0.1 psychological level, blah, 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 but I think remaining within this pitchfork, being bullish when we get out of the cloud, the 20 weeks should be more clear. These are things to watch later in the year when, the ETH hopium is at its maximum, screaming. EIP 1559 is on the network. We've got layer 2, all that stuff. It's worth taking into consideration. Also mentioned the Techme Capital Holistic ETH BTC Fund that I trade for Techme. You can see all of the AUM, deposits, trades, what goes in, what goes out, when I do what I'm doing and when. You can deposit USDC through your MetaMask or whatever and play along if you want, or just watch what I'm doing. So that's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.